Welcome everyone to today's crypto and stocks TA. Today is September 30th, 2021. It's about 11 p.m. Eastern Standard Time, so very late at night. But I'm going to go ahead and do the TA anyways. So if anybody has a crypto or stock that they want to see analyzed, go ahead and let me know in the live chat. I'm going to start off with Bitcoin. And I do want to point out that in my Discord group, I did on Sunday evening, my time, I released my free weekly watch list, and basically almost everything played out in terms of Bitcoin total, Bitcoin futures, Dow Jones SPY, and Nasdaq. So I'll explain a little bit of that, unless people have requests. So let's start with Bitcoin. What I was saying in the previous streams is we are currently in a daily downtrend. Okay, I know people want to be bullish out there and they want to see green in the market, but the fact remains that we're in this daily downtrend. Let me switch to a different chart so I can actually draw a little more. Let's use I'll just pick Poloniex. Okay, so how do I know we're in a daily downtrend? We're on a 1 day chart here because of this action. Okay, what I was saying in the Discord group is when I release it on this day, is that Bitcoin will probably most likely try to set the higher low and then try to bounce. So what that means is we pulled back to test support, like I was saying in the group, and we bounced. So that's what that means. Also, even if if you're not in my Discord group and you're using classical technical analysis of support and resistance, you'll see the resistance up here at about 45,000. Our support is about 40,000. So Bitcoin has been on a daily chart consolidating to the right for over a week now. One thing I do want to point out is we do have a temporary support for now at 40,000. Okay, how did I get that number? It's EMA. It's a moving average support. Okay. Also a psychological whole number, 40,000. So just using simple support and resistance on a longer term time frame, you can get your bearings in the market. Essentially, what's going on? What can I expect? So you might be wondering, okay, well, what's next for Bitcoin? Well, the story is in the price. All right, now I'm moving into a four. Notice that I'm not using like RSI, MACD, or EMAs yet. We're just looking at the price. Is that we're on a 4 hour chart. You can see here the resistance and the support, the two gray lines, we're just stuck between there for now. Why do we bounce up from here? Look at all the support down here, 40,000. How many touch points was that? 1, 2, 3, 4, 5, 6 touch points. So any trader who is a swing trader or a day trader needs to be able to identify that in the markets for any asset when that happens. I think the problem with September was there was a lot of negative global events that was happening every single week, right? So that might have had a psychological effect on people not buying at this particular zone, support zone, right? Also, we had the China crypto transaction ban, whenever that was last week. So that had some psychological effect, but the sell-off was not that extreme, right? The two sell-offs were not that extreme because a lot of people, and you have to know the history of Bitcoin, is the China sell-off, the big one, the mining sell-off was this in May and June, right? So a lot of people in China, the miners and the whales, they sold off here, especially miners, right? And then we had a little bit more of that crypto transaction ban in China, which seems to be priced into the market already because we're not crashing like this over here. So that's good. If there's any bullish green news about crypto, it's that, because a major country like that banning crypto transactions and the market doesn't fall apart, I mean, the news is priced in and people are hodling. So that's good. But if you're wondering, okay, well, what's next? Zoom in a little more. Now I'm on an hourly chart. You could really see the consolidation of Bitcoin price going sideways. Right? If I put it in white, you can see it. Somebody could call this BART pattern, right? In crypto, if you're on TradingView, you might see BART pattern, or the psychology of multiple bottom of price, or like some kind of almost dirty upside down head and shoulders, right? So let's play the two scenarios out right now. If if crypto is going to go, I'm going to start with the bear scenario, the red down scenario. Okay. If crypto's going to go down, we need to understand what's going to happen, right? Because you can measure this parallel channel structure, this, and then get your longer term targets, right? So if the structure is 10%, if we lose support, we can expect to fall down in Bitcoin price -5 to -10%, which would be 36,700. -5% to the downside would be 38,626. So I'll mark those two spots for next time on our Poloniex chart, just because I need a new chart, right? And the opposite is true. If we start to have really, really bullish momentum and this breaks out above resistance, you might see a rise of 5 to 10%. And remember, this is crypto. It's not impossible. It just depends on the sentiment and the hype and fundamental news. Like something needs to happen, either technical or fundamental news. So 5 to 10% to the top side, upside in the bull case scenario would be 47.3K or 50K, right? And that would make sense in all these resistance levels to the side, right? And the support levels to the left, we double check it. Oh yeah, definitely we have that. Okay, but you have to remember that the left side here was uptrending in August. September, we started downtrending because of global problems. It's not just a crypto problem anymore. Stock market is downtrending. Crypto market is attempting to hold the, traders and hodlers and whales. They're trying to hold as best they can, right? So now we understand that. We understand that we're in a daily downtrend confirmed. And the question for me was going to be, well, in the next couple months, are we going to break out and try to test to make another lower high in the price, like a bounce? This could be considered the bounce though, so I'm not going to call it yet, right? Because you had this structure back in the first crash. Now you have this structure. They're both consolidation structures. So a longer term time frame mindset would be, I just need to watch the break of the resistance on the top or the break of the support on the bottom. Example, will they hold or will they fail? If price keeps coming down and we lose that support, then we would probably obviously have some downside. Like this has been tested 6+ times. So 40,000 is a big psychological support that we need to watch out for. I know there are some day traders out there and some swing traders. Okay, so I'm going to turn on some other indicators. Now, it might be hard to see, but on the day chart, right, you do have a little bit of MACD momentum. Okay, that's good. And keep in mind that why am I streaming right now is because we're getting the monthly close in the next 24 hours, basically in the next couple hours. Right? You're going to get this monthly close on crypto, which actually already happened. But, to make it official on USA time, right? We're waiting for this monthly close. And at the end of the week, in the next couple of days, we're going to get a weekly close. Right? So all of this matters. All this matters. Because if you're zoomed in on a 1 minute, 5 minute, you might not see the larger picture that, wait, we just established a weekly lower high. That is not good. Right? But the fact remains that in a weekly chart, which I'm on right now, is Bitcoin can pull back all the way down to just above 32,000 and still barely just be able to survive, right, into like a consolidation equilibrium or higher low and still do that, right? It's kind of a long shot by now, like a stretch, because we should be able to bounce, right? Because we're on the EMA right now on the weekly. But you never say never. It's crypto, right? So the two longer term key scenarios is, all right, if we set the lower high on this weekly, then we're going to definitely retest support down here in the 30,000s if we lose momentum. In a bull case scenario, if something good happens to crypto and buyers start coming back, is we'll just pull back maybe halfway here, so upper 38,000s, right? And then try to see a retest of support, resistance and try to break that, right? But the fact that we're hesitating up here, okay, we're not having explosive parabolic moves right now is just, it's a reflection of the psychology of traders and investors and the world right now. Okay. Stock market does have an effect on that, so we'll talk about that later. But to wrap up Bitcoin, all right, yeah, we are getting a little bit of daily momentum, okay? Yes, we had that oversold here and the support held. Yes, that is good. We're still under the EMA resistances, okay? On a 1 hour chart, price has broken above the 200 EMA on the 1 hour, the H1. Although we are losing a little bit of momentum, it makes sense. It's trying to find rest on this spot right here, okay? Because if you have a big move up, which went 6% in like 24 hours, right? So it's just resting right now. Bulls are just resting. Okay, 15-minute chart. Yes, we do have the up cross, okay? But you want to see, we need to see momentum continue here, right? This is good. This is a good sign. It's not downtrending on 15 minutes, uptrending on 15 minutes. So we need to see the higher high. Bulls need to come back, right? We are heading right into a weekend, so that might not play out right now. And we just had everything's closing, right? In terms of the monthly close, candle close, weekly candle close, the US debt debate has finally basically been resolved today in the last couple of hours, right? So there's a lot that happened this month. So it makes sense that, cautious traders and investors would probably sit it out, right? That's where you have market hesitation. They want to really cautious investors want to see a little bit more proof before they come into the market. But if somebody's aggressive, right? If you're a day trader and you're like, I want to make profits or try to make profits right now, then yeah, somebody bought this support right here. Somebody bought that support, and then somebody also sold that resistance zone up here, right? Day trader. So there is a little bit of this momentum that still exists, but you could definitely pull back to the 42842, right? If somebody's a day trader. So here's where I would draw a little bit of some, trend lines. Okay, so you have this trend line support here, and then you have what I call the middle heart line of the channel. So 43,000 and then 42 upper 42,000s. Okay, so 5 minutes a little choppy, but it's still uptrending, right? You see it crossing up and down, but that's why we got to get our bearings on the longer term chart. Okay, so we just went through long term, medium term, and short term on Bitcoin. And I do, again, want to repeat and point out that in my Discord, in just 3 sentences, right? We'll just review it. BTC on a Sunday, I was saying we're going to get a support test. I literally just 2 words, Bitcoin support test. And that exactly happened. We got the support test right here. It was on this candle. We fell down to support, tested it, and bounced up to resistance. Exactly. Usually happens. Okay. Total. What was I saying on total? The support test, again, if you look here, the support is where? 1.8 trillion. Okay, I might have to erase this. Turn this off. The support was here, 1.8 trillion. Boom. Right here. We tested that support and higher low potential, which is technically set. Right? It's a higher low than that one. Boom, then you get the bounce. Right? But you have to watch out for this resistance trend line here. Okay, so you just visually, even if you turn off every single indicator and turn off the watch list and just stare at you're not even using candles, you're using a line chart, right? You can see visually the crypto market was uptrending. Okay, I'm just going to keep saying this to people. It was uptrending, now it's downtrending. But that does not mean we're going to go down forever, right? Because you could get bull flag or consolidation pullback and break through that. You need to see that evidence. right? The reason why I don't call that stuff all the time is because you need to see the actual break close and happen, right? That's why I give scenarios and then we just watch for momentum and then we can place our trades. So it makes sense, double bottom on the 40,000, right? And that was a moving average as well, right? So, and then the Bitcoin futures, see, I'm just reviewing this for people who maybe are not in my Discord. Is we're looking at Bitcoin futures now. Okay, this is the Chicago Mercantile Exchange here in USA, right? They started the Bitcoin futures there, so this is the Bitcoin futures chart, if you know what I mean. This is the important chart. And what I noticed last weekend was the futures chart does not look like the Bitcoin chart because the futures exchange closes. So what I was saying is on my Discord, I'm looking at it right now, I just wrote support test. What does that mean? It's going to pull back down to support and test it to see if it holds or not. Thankfully, we did at the upper 40,000s, basically 41,000, right? And it rallied up to the resistance zone, 43,000 or 44,000. And then we're selling off from that, okay? So it's not random. This is happening. Downtrending, right into support, and then bounce to resistance. This is textbook downtrend definition. So we don't have to get confused or afraid or mad or FOMO, right? It's a support level. Usually somebody's going to try to buy that if they're aggressive day trader or swing trader. That's just how the market works. And algorithms and bots are programmed to do that, to buy here and sell here, and they just made money. So yet once we kind of understand that in the market is I'm saying you have to use stop loss, right? And again, it's not financial advice, but risk management, right? It's not that you buy here and let it and close your eyes. That's not good for trading. That's actually that's 100% risk, right? You have stop loss here below this candle wick. You didn't even need, I mean, you needed the stop loss, but you didn't have to have any like emotional reaction or anything, right? Somebody is doing this trade. They put 3% stop loss, target 6%, and they sold off literally right now, today. That's how trading works. So somebody could use a tighter stop loss if they're using more capital, right? 1 or 2%. If you want to be really conservative because it's Bitcoin, right? Then you just do 4% and exceeded that target, you made 6%. So there's an example of trading Bitcoin and risk management. Okay, so if anybody has any requests, please let me know. I know there's a couple people watching here. Any stock, any crypto that's on TradingView, I'll take a look at it. So let's go. If there's no requests, I'll just go down the usual list of. I'll open it up. We have to check Ethereum though. Always got to check Ethereum. Where's my list? All right. So we'll look at Ethereum. FUSDT on the Binance chart. All right, Ethereum's a little different than Bitcoin. It's not exactly the same, but you can see here, I always have to point this out to people. It's important. We have the resistance box here. Resistance box, loss of momentum. And someone could say this is basically turning into like a giant bear flag, right? Because you could see it. It is consolidating. So if you measure this conservative, 8% to liberal, 50, so the 7 to 15% from the breakout. So in a bull case, we would go up to 3116. Second target, 3387. Okay, those are two longer term bull targets. If the inverse is true, if we fall down 7% to 709 and then 2475. Right now that you have those levels, we don't need to be afraid of the chart or a crypto market. It's right at 3,000 even. You see the ticker flashing, right? Because crypto market's open right now. It's flashing right now. So if we pull back, it would make sense. We pull back down probably about half. You can't see what I'm doing. Probably about halfway here. So 2,900 or 2,800, right? Because it's just tightening here. It might tighten here for the whole weekend, right? You just want to watch out for that. Okay. Short-term EMAs down cross on the daily. And again, the monthly candle close on Ethereum. This is not the greatest chart to look at because you're missing loads of data, price data, but you can still see, right? Up here it is consolidating. We're starting to get that monthly pullback. So now on the longer term chart, just this, you have to be really sensitive to monthly charts. There's that resistance right there. Okay, so if we do not break above, if we can't hold 3,000 for now, we're not going to go to 4,000. It would make more sense to pull back and retest support of like 2,000 or 2,500. Just on those two monthly candle, monthly charts are very strong and powerful. So we cannot ignore that. Right? You can see here the first rejection, the second rejection. So on a weekly chart, right? I have to stop saying right, but on a weekly chart, we could get a significant pullback. Okay, so now I'm talking about long-term bearish scenario first, because we have bearish momentum. Is we could pull back usually about halfway here, so 2,300 range. Okay, just like Bitcoin, 2,000 is our line in the sand. We have $1,000 in Ethereum price to maintain the higher low and try to bounce. At least for now, the best case scenario for bulls is just consolidate, just maintain, do not drop, right? You mean no crash. We don't want that. If somebody's a bull, if somebody's a bear, they're really happy right now. They're like, yes, short it down, right? So if we look at it like this, these are two larger levels, and we just hit the top of this consolidation parallel channel up here. So I'm not surprised to see Ethereum pulling back and day traders buying these oversold conditions on the bottom here, but it's also related to stock market. Okay, so now we have the bigger picture. Again, there is a little bit of momentum building here. I would not be surprised if Ethereum pops up. But again, looking at this, okay, if this is a bar pattern or upside down head and shoulders, a little dirty, it's not perfect. But the support trend line has been holding. We're at the resistance trend line. Now, I would not be surprised if we pull back one more time to 2857. I would not be surprised. How do we confirm that? Okay, if somebody's a day trader, you got to really, really go inside on the price action. And for me, I tend not to look at other indicators when I'm zooming in, just because you can get kind of psychologically uh, influenced a little too much by MACD and RSI and moving averages and stuff like that. All you because like if you look at this, it's so choppy, right? So sometimes I just turn it off and you just understand what's the structure, what's the pattern here. Okay, symmetrical triangle. I see. So we had 2, 3 rejections from that. It's hesitating here. It's stuck here. So if we do not break out and retest, it's probably going to pull back. Just lost some momentum. It's done that 3 times already. All right, so it really needs to, both case scenario, break out, bounce, and just pummel through these resistances up here. But that would mean that people need to buy. So from a psychological standpoint, are people hyped up about crypto right now? Does everybody in the world want to buy right now? To me, not really, because of what's happened this month, the totality of events that happened this month. We're starting a new month tomorrow, though. Tomorrow's Friday in America, and then we have a weekend, and then that fresh Monday of trading is going to start on Monday. So that's why I keep telling people about that. Monthly closes are kind of a big deal in the stock world and crypto as well. There's Bitcoin options, right? So that third week is very important. Okay, so hopefully that makes sense to people. That if we do not break out here, then we're probably just gonna get stuck or pull back down. So I'll highlight the 2 levels spots in blue. That there's one more here. Those are the 3 spots you want to watch out for on Ethereum. 3,000, 2,900, and basically 2,800. 3 easy numbers. And For example, if somebody goes long, tries to go long right here, there is there's more risk, right? If you have a stop loss down here, okay, it's below all this candle noise, 2%. It's easier to get stopped out if somebody were to long right here. I'm just showing this as an example. Try to get that 2 to 1 or 2 to 1 risk to reward risk ratio. And yeah, that, there, if it just crashes down, you get stopped out and you're like, why did I take that trade? So, better spots of value. And I'm starting to use the green box so people can actually see what I'm talking about. Okay, better spots of value, 2,900, because the risk is lower. The better spot is way down here if somebody has the patience to wait. For example, in this pullback from September 26th down to 28, that was 2 days of waiting, 3 days of waiting, actually. Does somebody have that patience? Right? Experienced traders and investors probably do. If somebody just started 1 month ago, probably not. Right? So you have to do the analysis and kind of get your levels ready. And if you're a long bull, you have to decide, you have to make a general plan. Okay, where would I buy? Where it's a pretty good reward to risk ratio. Very aggressive bulls would buy the breakout in terms of the aggressive day traders, swing traders. Conservative people, if we start to get a pullback, right, would probably buy at the 2,900 range, right? Very, very conservative would wait for the support or wait for completion of this pattern. Okay, so that was a little educational on Ethereum. Oops. Just gonna check the chat. Sometimes the chat freezes and I can't see anything until the stream is over. All right, I'm not seeing any comments visually. Let me just refresh, make sure it happened before. Okay, people might be sleeping right now too. All right, so let's keep going here. Let's look at Binance Coin because it's Binance. Okay, so the day chart on Binance, and I'm gonna start to go a little faster, okay? Because I went from Bitcoin to Ethereum to education, and now I'm just gonna try to do these a lot faster. All right, so Binance Coin, we have the in a longer term day chart. I'm already seeing this pattern already coming to fruition here. Okay, very simple in terms of the pattern, drawing the pattern. Get at least two plus touch points on your trend lines, and we have support and resistance. Support right here at 322, resistance 500, and that's what you're playing off of right now. We just had that bounce right here off of 315, $315 stop loss. Just okay, because it's Binance Coin, right? This is more of a swing trading investing stop loss, risk to reward, right? Somebody's trying to make 20%, risk 5 to 10%, and they just made their 4-to-1 trade in 2 days. Why? Just buying the support level because it's held 1, 2, 3. This is the fourth time it's come down. And here, after we establish this pivot point here, this becomes the resistance, and then you could draw that resistance trend line. This was already here for a long time. This bottom trend line was here for 4 months. So any experienced or swing trader, longer term trader knew that would be an interesting spot to buy. They planned it. A lot of people just put their orders there and just let it go on their exchange. So I'll just stick to day charts. Okay, we'll do the next one. What do we got? Comp. First thing I'm seeing is resistance here on this chart. Boom, right here, 514, support 220. So then the middle part of that, like 340, we just lost it a couple days ago on comp. And we have this trend line, short-term trend line on the right side here, just pinning that price down. And bears are using that longer term on a day chart to really just write it down. So this is definitely downtrending, but it did find a temporary support here. And you could see here, it's like this sharp downward sloping wedge. So if we come down, it might hit 265 down here. If we break out, which is important, retest, then try to survive. Okay, but this is the pattern we're in a consolidation pattern. You see that? And then we broke down and went down to the right. So that's just how it is. At some point, when something good happens in the crypto market, is we might see a bounce down here, but we need to see it happen on everything like Bitcoin, total, futures, and then altcoins too will follow. So that's just the price structure you're in right now. And then just a quick Fibonacci for reference is, yeah, you're below the 618, just touching that 786. So in a bad case scenario, you could fall back all the way down to the 0.88 Fibonacci 250, the 0.786 Fibonacci 281, or 200. So just kind of want to watch out for that in terms of what actually happens with the comp price. Next, Litecoin. Let me use USDT. Litecoin on Binance. Okay, Litecoin holding this middle term support better. But if you zoom out, you can draw trend lines. That one, right? Once you have a pivot point and you have two of those, you could draw it. So there's that longer term structure. So it's just, that's what I'm saying. It's in the middle support. It's literally floating in the middle um, of the price range. So the resistance is 164. The immediate support is 138. But you can see down here, connecting these support levels, right? This is going to be an interesting support zone down here, the upper 100. It's like 114, 110, 114. Right? So you're playing between these two levels right here. And again, are we super oversold on a daily? No. So we had a double bottom on our RSI. We did get oversold on our 4-hour chart, but we have to break above resistance. If we fall back down to support, somebody might buy it there. But in a really bad case, it'll come down to 117. In a good case, we'll find a bottom, hopefully somewhere around 140, and we could bounce up to 180. Okay, next, Dash. I'm gonna go a little longer today, so if somebody has to go, feel free. You gotta go. You gotta go. So, but I'm gonna do some crypto and then some stocks. I know it's late at night, but I still want to give out some free analysis here, just so people can get their bearings aligned. You know what I mean? We had a lot of bad news this month, so we just use the charts, not get phased out by any news, and just trust in the price action and the technical analysis. So we have a resistance here on Dash. And okay, you can see here we almost hit that support level. It bounced up because Bitcoin bounced up, but I would not be surprised because it's downtrending if we just set a lower high right here and pull back down to 138, because that's the more obvious trend line. And we have support zone right there. So the literal X marks the spot in that like 128, 130 range. And then we have our resistance targets up top. All right, so a longer term consolidation pattern like this basically means mixed psychology in the market. Maybe half the people think we're going up, maybe half the people think we're going down in the Bitcoin market. But longs, right? You just kind of don't want to go long at a resistance. I have to keep trying to teach this to people and tell people this is when you long at a resistance, there's significantly more risk to the downside. To the downside. When you buy a support, there's actually less risk because you're buying a relative low. And you see, and this was also fundamental news here, right? But you hit the support level, and just even if you didn't know El Salvador was going to legalize Bitcoin, and we didn't know, um, about other altcoins about to rally, and Bitcoin is just okay at the support level. All right, let's put on a trade, put on some risk with a plan. Okay, the reason why it's no FOMO charts is you never want to be that the person who just gonna follow the hype and just buy at a random spot. Usually it's too late, right? And then you just close your eyes or forget about the position and you're down. Not you, but a trader would be down negative 50% or negative 40%, and people are wondering what happened. It's because risk management, position sizing, technical analysis, Buying at a relative support level is all very important in crypto and stocks. Because if somebody makes 10 to 20 mistakes, they just blew up their account and lost all their money, right? So putting risk on is kind of a big deal. You just have to put it at the right spot and trust in the setups and trust in the technical analysis, right? Because if you're just not even using technical analysis and just looking at a price number, it's a lot more difficult. You need the price action with indicators as like a little bit of assistant tool, right? But even if you didn't have, even if you did not draw anything, you didn't even look at the volume, you can just see here like, oh, wait a second, it's coming to some kind of, there's some kind of support zone right here, like that. And then up here is like, wait, we're in some kind of resistance zone up here. So you had some general indication, and this is for all crypto, is you had some general indication of, okay, if we do stop here and bounce, where might we stop? Somewhere up here first, right? All these levels on the way up, and then it stopped here and reversed down. So now if we're reversing down, okay, where might we see the reversal happen? Somewhere here. Somewhere here, right? Longer term. And then is it going to turn to upside down head and shoulders? That would be nice for bulls if that actually turns out to be real, right? So that's why this that turned into a really educational example, right? This is not financial advice, just education. Oh, we have somebody in the chat here showing a chart of algo. I can't really see what that is. H1. How do I close this? This is somebody else's idea. It's not my idea. Let's look at it then. Let's look at algo. Algo USDT. So what I'm going to do though is I'm going to start. You're on an H1 right now, but you have to remember that the monthly and weekly is about to close. Okay, so this right here is a monthly shooting star. That is not strong. Okay, we have seen a shooting star in the past, but that's when the crypto momentum was kind of at a maximum, the hype. So you can see here where in the algo was touching that upper resistance zone of 253, 350. Right here. Okay, right here. Some might argue, but wait, no FOMO charts. Isn't this a cup and handle? Possible. It's possible. We do need to see the pullback though to make the cup before a potential breakout. But the fact remains is either way, if it's a cup or not, if it's bullish, it needs to break out of the resistance zone and go up. If it does not, it's going to lose momentum and pull back down. Longer term, we're on a monthly chart. Okay. So it isn't a monthly uptrend, but it looks like if we're going to start the consolidation, it might pull back a little bit. All right, zooming in. Weekly, we do see this, the weekly consolidation pullback underway. That does not mean algo is going to crash to zero. It just means that the bull rally went up, people took their profit, and then bulls are resting and shorts are taking over for now. And why do we stop here? There's a resistance, support level at $1.58. $1.50. You see this price cluster on the left side. Boom, like that. Boom, right here. So yes, we are at some kind of relative support zone, right? What was once resistance is now support. Now the question remains, are we going to bounce up from this or not? Because support does not always hold. You could see that as a fact on the left side. This was support and we failed and we stayed under it for a while, but then we finally broke out above it. So now this $1.50 is the first line in the sand right now for bulls. If I could draw that straight. $1.52 on a daily chart. Okay, if you have your Fibonacci, boom, right here, okay, 50%. All right, if we lose the 150 support, then 140 is our immediate downside target. And that's also confirmed by this entire price structure on the left side. So we need to watch out for that. Yes, we'll get to it. We'll get to it. Because I have a lot of different types of investors, traders, medium-term swing traders, day traders, scalpers that following. So we go from long to short term. So again, even on the 4-hour chart, you can see here, I'm trying to draw it so you get understand like where I'm coming from. yes, you do have this, right? Just similar, very similar to what you're doing, right? Now we're on the H1. Okay, so we're on the H1 here. But do realize though, yes, we double bottom here. Just quickly flip to the Bitcoin chart. That's what I would do. Quickly flip to the Bitcoin chart, and you can see that Bitcoin's consolidating. Right, we're on a Bitcoin chart right now. So it's consolidating like this, like we looked at before. So if Bitcoin pulls back, probably greater than 50%. Last time when we had the El Salvador crash, 80% of coins went down, followed Bitcoin correlation down. Only 20% went up, according to my list, in my list. Right? So you have to just kind of keep that in the back of your mind is if Bitcoin pulls back, altcoins will pull back too. There's only going to be a few altcoins. There's like 5 or 6 that actually rallied, and it's because there's a lot of people piling into those on day traders, and it went multi-session. So yes, if someone's a swing trader, aggressive day trader wants to put on some risk as an educational example, this is this is a relative support level, right? It's just a matter of position sizing, risk management, and understanding that downside would be is possible if Bitcoin pulls back down. It's definitely possible. Looking at volume, short-term time frame. Well, you could use the volume. You could also use the VWAP if you're looking at intraday price action. VWAP is a volume weighted adjusted price. It's really hard to see, but on crypto it kind of doesn't work as well. VWAP is actually really used for stocks really well, but it does include the volume in the VWAP, right? So it's just kind of super choppy VWAP though. It's not the greatest example. RSI, okay, yeah. RSI and MACD are your standard moving averages. RSI, MACD, volume. That's like the standard technical analysis package in terms of indicators. Those are like the 3 or 4 indicators that people use. What I would recommend though is yes, also maybe take some time because this is from just my own personal experience and knowledge is take some time to look at the price and volume like alone. Just hide all the indicators for a little bit. This is like one of my techniques. So you can kind of get your mind not so focused on RSI is this or MACD is doing that or EMA is right here or VWAP is this, right? Is you kind of have to manually draw, which you did. I saw on your chart, right? But just like manually draw and understand both sides of what could happen. We're on the 15-minute right now. So if we understand this, we have our relative Fibonacci as support and resistance. And so you just kind of have to look at it like this and be like, okay, do we have good risk to reward ratio here? After we draw our trend line, our support and resistance, we understand Bitcoin, right? To somebody to like an aggressive to medium aggressive risk trader, this is some kind of setup here, right? Where you risk 5% of a smaller position size and then try to target the 10% on the top. It might take a week to play out, right? This is more of a swing trading, right? You get stopped out, then you get stopped out, right? If it goes up, you take your profit. Very simple. Just that's how you execute a planned trade. It's you see the risk reward, and if at a relative support level, okay. If you find it, and there's no super bearish news that's going to crash the market on you in the next week or so, okay, put on some risk. You understand what's the downside risk, okay. Position size it properly. You're not going all in, right? Because if you go all in, you're wrong 10 times or 20 times, you just lost all your money, right? So you don't do that in trading. You have position size, risk management, and once you hit your targets, you're done. You sell half at least or sell all. You're done. right? If it's bullish, then I understand people want to sell half if it continues up. But if it hits your stop loss, you sell all and you're done. But you need to have those kind of hard and fast rules so you survive in this market and thrive as a trader, as an investor, right? People who lost 50%, 70%, negative 80%, negative 90% on their money is because they don't have risk management in place, position sizing, strategies that actually work. So to answer Zay's question, he's saying he day trades crypto futures. You've been using RSI and Arun. What's more advanced? Advanced. I would like to do more research. Honestly, the standard package, if you're a day trader, we're talking like standard tools that people use on everything, is moving averages. Okay. Moving averages, either simple moving averages or exponential moving averages, RSI, MACD. Those are the two or three most popular indicators, I would say. And then if someone's a stock trader, they're using VWAP, volume weighted adjusted price, right? VWAP on crypto is not the greatest indicator, but if I switch to like Apple or something, you'll understand. VWAP is powerful. VWAP works. I shouldn't say it works all the time, but VWAP is useful. Like it's like to me, it's like a moving average, right? If you don't have VWAP on, but you turn VWAP on, it kind of makes a difference visually, right? But that's for like really super short term charts. If you can't really put a VWAP on a 4 hour, it doesn't work like that, right? So if you don't want to use VWAP, that's fine. Sometimes I don't use VWAP, but RSI, MACD, if you learn how to master those, you'll on all time frames, like long term, medium term, short term, you have a definite advantage over other people who do not understand RSI and MACD. Also, keep in mind that no one indicator is 100% accurate. If you do back testing by yourself, you'll find out the truth. No indicator is 100% perfect or accurate or 100% profitable. And what I learned also through experience is that fundamentals can destroy technical patterns, right? Even if we're looking at this ALGO H1 chart, even if we're looking at ALGO H1, if something really bad news happens on Bitcoin 2 days from now, this triangle kind of doesn't matter as much that algo's in. So you have to just always keep that in the back of your mind. Crypto, everybody heard this probably if you've been in crypto long enough that crypto is a risky asset. You could lose some or all your money in crypto. You just have to understand that. And leverage, crypto futures, crypto options, right, is can be very dangerous because if you have a losing strategy or you make too many mistakes and you're leveraged, the account is blown up and done and bankrupt in like 4 trades. So you do not want to do that. You do not want to do that, right? I almost never recommend leverage to beginners, right? If you want to prove that you're a good trader, then paper trade first and do like 100 day trades and prove to yourself on crypto and stocks, paper trading, that you can become profitable, right? Instead of losing all your money and then somebody just proved that they cannot be profitable. So this is turning to a real educational stream, but this is interesting. People have real questions. Volume profile is useful. Volume profile is useful on longer term charts too. But volume profile, like if someone's intraday, um, right, then you just use volume profile on that one session, on the day session. So I like volume profile. It works too, right? The visible range or session volume. Right? I'll just try to do it like this, an example. Right? So you can see the price cluster here, but through experience, you also know that if this is looking here, right, you could see that you just draw a line right in the middle. You could see the inflection point without the volume profile. But again, for me, I've used and I've tested basically every single public indicator on TradingView. Is if you're going to do research, then test it. You know what I mean? Like test it, back test it. So I found out what works for me, and I just use that and I ignore everything else, honestly. That's why you don't see me using some crazy weirdo indicators. Not weirdo, but I just back tested what I found works. I use that. If it doesn't work, I don't use it. Very simple. So I would say I would recommend like volume profile, Arun, RSI, back test it first. Back test it. That's why TradingView exists right here on the bottom. Strategy tester right at the bottom is a panel for it. Paper trading right here, trading panel right here. Text notes, you can write it for yourself, right? Pine editor, you can make your own scripts. Stock and crypto screener, you could, you know, once you find your strategies, that's how you look for it in the market. Everything's here on TradingView. Watch list, right? It's just what I find is even for myself in the beginning, and now we're going to educational for like 10 minutes. Even for myself, is I would rely in the beginning when I started out, I would rely too much on indicators and not do the manual technical analysis. Because again, on algo, if you turn everything, let me use a different chart. Let me just pick a Huobi or Huobi. If I turn every single indicator off and just use price and volume, turn the watch list off so I'm not even looking at prices blinking around. That doesn't matter to me. What matters is where are we in the trend? Support and resistance on the day chart first, right? Without even understanding, you don't even need to understand RSI or MACD. Is you understand we're at the support test of a previous resistance zone here, yellow box. Then if we lose that, even if you don't have Fibonacci or anything like that tools, you could see visually where's the next spot down right here, $1.22. From experience of drawing support and resistance over and over and over for years straight, every single day, you understand that even with or without indicators, this is a price, I call it a price cluster. Previous resistance and support, which will extend out here. That's why we touched that on that one candle. It's extending out from the left side. Boom, here. We have another support. Boom, here. But if you do want to use tools, it's all available on TradingView. But that's why I focus so much on support is because people are trying to, and this I'm not bashing anyone. It's or any indicator. I use indicators too, but I'm just saying is classic technical analysis works because if we lose this support level, this right here, $1.40 up or $1.30 is the trend line support. So I would not be surprised if we consolidate all the way down right to that X marks the spot right there. I would not be surprised. I cannot see your chart. And again, I'm because it's a free stream, okay, and there's other people watching. I'm not going to answer every single person's question. So I answered algo and some indicator questions for you. Um, so if you want to go ahead, if you want to follow me for the next stream on TradingView, YouTube, and Twitch, or I have a Discord group, then feel free to do that. But like if somebody has a lot of questions, you might want to book a private might want to book a private coaching session for me. But there are other people who watch, so um, we'll just try to do a little more here. What I'm going to do is I'm going to go ahead and switch over to stocks. Thanks so much for all those questions. Again, if you have a lot of questions or you know, join the Discord group, that's free. If you really want to, pick my brain, then you could book a private coaching session with me, which will be paid. Okay, so SPX, S&P 500 index. Okay, so why does this matter? Okay, we talked about crypto for an hour. Why does this matter? Though S&P 500 is that Bitcoin is one asset in this world. It's not the only asset that exists in the universe. So also, again, we had a lot of bearish news coming out. We just had the U.S. debt ceiling um, legislation bills passed today by the House and the Senate here in the USA. It's a big deal. Asia markets are already responding kind of negatively to that, right? They're pulling back. China's pulling back. Hong Kong's pulling back. Japan's pulling back. Let's look at UK 100. Interesting. UK consolidating to the side, to the right side. Look at India. India even pulling back at the resistance. I was saying if you're doing India index trading, watch out for that. Right at that resistance at that top here. What else we got? We got some Australia traders. It's a proxy for the index. Aussie 200 index. Even Aussie 200 index pulling back a little bit, right? But still trying to maintain that higher low for now. So we have worldwide pullback. Okay. BTC USD also. We had the pullback, but Bitcoin sometimes can be a leading indicator and bounce up. So where does that bring us? Let's start. We'll go down Dow Jones, S&P, and Nasdaq in a row here. I know I have a lot of lines, but bear with me here. First, okay, is we had the double top right here in end of August, September. Okay. Then we made our lower low and our lower high. And for the past 3 days, we've been pulling back down. Technically, why? I did draw this yellow trend line here, and I was calling it on previous streams. You'll see here, okay, the play by play, if somebody's new here, is we consolidated here and pull back down. And I said in my ideas, these are the 3, 4 support levels, 34374, basically in the blue on the left side. And we touched it and we pulled back to touch it and we bounced back up from that and up here. Okay, and I said where might we stop? Well, this is our resistance zone. Okay, so note that I'm not using indicators. Okay, you can still do this without indicators to get your support and resistance levels and trend. Then you could use indicators to really time it better. Right? So then we hit that resistance exactly. Right? In the Discord group in the free watch list, let's just read it. The one line, resistance price test on Sunday, daily higher low price potential. So what was I saying? Resistance price test. That means the price is going to go up, test some kind of ceiling and see if we can break through it or not and pull back. So what is that? Is this candle exactly what I'm talking about right here in the circle? Resistance test, meaning you push up to test the resistance, you fail on a 5 minute, 1 minute, 15-minute intraday, and then you pull back down. That is resistance test and a failed test. Okay, the second part though is higher low price potential when I was talking about on these days, because if you pull back down on the price, I'll draw here like this. If you pull back down on the price, okay, if it maintains the higher low, then you have a chance at bouncing back up. If you don't, then you see pull back down, right? You can hit this, and for Dow Jones is bad because we closed below the previous low, so now it's definitely downtrend confirmed. Now this is where a spot where I would bring in indicators a little bit to see that, oh wait, maybe we might have upside down head and shoulders here on this RSI, so we might have some upward momentum bounce within the next week. Right, 4 hour. Okay, you definitely see here possible upside down head and shoulders on the RSI, and then you double bottom on the price here on the H4, on the H1. Yes, you do have a low oversold condition, although you could pull back significantly more, right, to really test the confirmed double bottom here. But it is in a very short-term downtrend on the H1. So you see here that we went from 15-minute uptrend inflection point to 15-minute downtrend. It's important. If someone's like a day trader, we have to be on our toes. Is that if we lose, I know there's a lot of lines here, but if we lose that trend line, you have to draw again, manually draw, and not be so dependent on indicators. You manually draw. You understand once you lose that support trend line, okay, that's not good. You bounce up and then you have a resistance. That's not good. That's why any experienced trader and investor is able to understand that. Once you practice and you have enough knowledge and skill. So I'm using real world examples for education here. So then the next question remains, all right, that pattern's done, it's over. So now we have a new pattern here forming on the Dow Jones Industrial Index. So now it's at the trend line support relative. Let me draw a better one. You have to draw a really accurate trend line so you get some sense. Okay, so someone might say, wait, we might have lost that support. So that's another key. If we lost that support, right, if we really draw super accurate trend lines, okay. If you draw like that, then okay, you did not lose the support. But I would not be surprised if we actually poke down because somebody is watching this. Experienced traders, investors, they are watching this level right here, 33616 tomorrow morning. If we break below that, if this downtrend continues, we have massive sell-off. Then if we lose 33647, then intraday traders probably gonna shorts are probably gonna take momentum and push this down as far as possible. Monday and Friday. H1, H4 though, right? On a longer term, okay, we might have some bounce. On a weekly chart though, for if somebody's an investor, we are definitely setting our trying to save our higher low on the weekly chart, trying to save it, right? But this is kind of some rounding top action. But if you look here, it is possible, like in June, we have a big week of selling and then an immediate reversal up. So intraday, shorter term price, medium term price is going to be our guide. Like we can't just look at the monthly chart and weekly chart. But in a day or two, right, we can confirm all right, we might have set our monthly consolidation. I was trying to say but we might have set our monthly consolidation here. Okay, where I started to lose a little bit of momentum. So I'd be a little cautious right now in Dow Jones, obviously because we're pulling back. But if somebody's a long investor, understand that we're just at the bottom of this support price, what I'm going to call cluster. This entire structure of the giant yellow box, it's kind of turning into a consolidation pattern. Okay, so let's go to S&P 500. S&P 500, before we look at indicators, is understand that we got rejected from this top side zone of resistance and the support level down here, 4253. So if somebody was, again, um, what was it? My Discord, I was saying same thing, resistance test, daily higher low price potential, which the second part failed support. So that's very important to note, okay? That potential means maybe. That would be a bull case, right? This higher low needed to stop right here, and then we could have double bottomed. That would have been a bull case, or we could have did this and break out and at least consolidate, but that did not happen. So that's why when you have a breakdown of support, it's significant. So this relates to Bitcoin. This relates to crypto, all crypto. You have a breakdown of support and a candle that closes below that. It's important. The reverse is true as well. When you have a resistance zone and you break above that and you hold above that, that's significant as well. Inverse is true. When you have a support level and you break and close below that and you stay below that, that's important. So now traders or investors are watching this now. Okay, where's our next line in the sand? It's already drawn here, 4254. That's the bearish target for shorts and options traders and futures traders on SPY. That's the downside target. Why? Because we have this downtrend momentum here like that. So I would not be surprised if we sell off one more day to test this, 1 or 2 more days, test it and try to pierce it. And the bulls will say, no, we're going to hold that line. Right? It's the battle every day between the bulls and the bears in the market. So just want to watch out for that. One thing to note though is if you zoom out, I remember somebody would show me this and do this as well. On a Dow Jones, if you zoom out, there's an additional, a longer term trend line. Because the shorter term trend line, we lost it here like this. You see that? We lost that. Okay, so now that's over for now. But if you keep zooming out, there's other trend lines you can draw to find the potential downside support like this one right here, like that. Right? That's why it's important. I keep telling people from experience and knowledge to keep drawing and leave the drawings up there. Keep drawing your technical analysis, support, resistance, trend lines, and notes to yourself. Just lock it in there or take a picture or make an idea and commit to it. Commit to the lines because If somebody did not draw this at all, they're panicking, right? They have no idea. People are afraid. It's in the black space, right? But if you draw a technical analysis, it's not in black space. It's right at the support trend line. This one up here lost the support trend line. So now you have a downside and an upside target. If you want to draw another one, you could if you wanted to. So even here, if you draw this long one, there's some warning sign when you started going sideways like that, right? But I'm not going to use that one. Our previous pandemic high was 29,608. So that's a big, big, big support line in the sand. Hopefully we never get down there because that would mean a market crash. But if we Fibonacci the bottom of the pandemic to the top of the pandemic, relative high price, you can see here our support levels in Fibonacci, mathematically calculated, or it's all right here. So, don't be surprised if the market tries to pull back and target one of those, because I guarantee you, experienced technical analysts and traders, investors, they're using the tools that are available to get some kind of plan. Hedge funds, market makers, institutions, they're already thinking, they have to plan and think months in advance because of how much money they have in their trading. So this consolidation could be a bunch of hedge funds and institutions just taking their profit, slowly selling the Dow Jones index slowly, right? There was news today of a trader doing put call options as protection hedge against their stock portfolio, $96 million position. Okay, there's those types of people in the market that have more control over than a retail trader's account, right? $96 million put call options hedge spread. Okay, that's a huge, huge position. So that's what we're up against in the market, and we have to use technical analysis to get some kind of plan, get some kind of plan of action, if you will, using the support, resistance, and trend. Okay, so now that we're at this support line, trend line, okay, trend lines can fail, just like the first one failed. We wrote it up 4 times, failed. Try to bounce, failed, because there's a trend line. Then we pull back. Now it's going to be the second test of this trend line down here. If we don't hold that, then we can see pullbacks in the stock market down to 32,000, 31,000. Okay, some of these are in my idea. That's why I don't change my ideas all the time. Is I have longer term ideas and prove let the price prove what's going to happen to me instead of relying on indicators and just looking only at like a MACD. Somebody can get really excited about indicators and stuff like that. They're just tools. They're actually derived. They're calculated from the price as laggard indicators, right? So if you kind of pre-plan it a little bit and actually put some sweat equity and work into the chart, you can get ahead of people in the market. It's possible. That's why I draw. Personally, I don't like to draw a lot of support resistance, but I draw a lot so it kind of future proofs the stream a little bit. So hopefully that makes sense to people. If you want the one sentence answer, is we lost support today. Okay, we're gonna the previous lower low here at September 21. Now we're about to test our support on the downside. Trendline support first, 33642, and then horizontal support 33,000. All right, so that's Dow Jones. S&P is kind of similar. We're going to test our lower ranges here in the 4,300 to 4,200 to 4,200 range. Okay, it's gonna the shorts. They're probably going to try to push it down as much as possible. Right, you might see one move down tomorrow, and then if this upside down head and shoulders is actually real, at some point we should get the bounce up. But I would not be surprised to see S&P 500 push down to 4261 zone, because that's our previous uh, price resistance and support zone on the left side. Also, tomorrow's Friday too. It's the start of a new month. It's Friday, and so you know you might not see everyone uh, making putting super large positions on a Friday. But you just want to understand it's in a daily downtrend for now. Okay. This pullback, that's not daily downtrend, that's intraday downtrend. And you have a V-shaped recovery. This time is different. That's why I'm spending so much time with people on talking about the stock market and crypto is actually this time is different because we did not hold the support and bounce up. There's so many bad things that happened this month fundamentally and technically that okay, we lost it, man. We lost it. We're in the daily downtrend now. S&P 500. So now the question is, where is this lower low going to be? Yes, we do have upside down head and shoulders on MACD histogram. On 4 hours, we have our upside down head and shoulders on our side. So it's going to bounce someday. It's a matter of where's the low going to be. Okay, so that's S&P 500. Just really quick, the Qs, QQQ, NASDAQ ETF. Okay. Um, thanks so much for watching and following. Really appreciate it. So uh, we did an hour of crypto. I talked about Bitcoin a lot and altcoins a lot. Talked a little bit about education, answered some questions, some charts. Now we're on stocks right now because it's kind of important because we're getting the daily downtrend pullback that hasn't really happened since May. So it's significant. Okay, I'm gonna just erase everything. Well, actually, before I erase it, I should note that on my Discord, okay, QQQ Nasdaq was different. I was saying we do a resistance test and then daily lower high price test, which means this resistance test here, okay, and that lower high is going to get tested, meaning are we going to break through or not? So it failed, then we pull back down. Okay, actually, I should have wrote to make it very clear to people lower low price test, but you know what I mean. This test of this yellow box, right? Lower high, nope, and then returns to a lower low. Right? That's why I had these two lines. If this held, it would have been a double bottom and break out and see how that can break out. If not, pull back down, lower low to our support level that we just marked on the blue chart. And again, if you zoom out, you might be able to draw a longer term trend line and get your bearings. Meaning you have some, you see that? It's right there. The longer term trend line. The shorter term trend line is here. We lost that. Okay, that's fine. We were planning for that. The longer term trend line is here. We're at that. This is our second line in the sand. If we lose that, we're pulling back down to 340. If we lose that, we're pulling back to 318, 300. Okay, like long term. So if we don't end up holding this trend line, we might be in trouble here for NASDAQ tech stocks. Okay, it depends on how much the hedge funds, the institutions, the options futures traders of QQQ tech stocks are going to short this down. At a certain point, we will get oversold, right? We might be oversold like literally right now. So what I'm talking about could play out tomorrow. It could play out Monday. It could play out 1 week from now. I'm giving you the scenario heads up. So we already had this head and shoulders pattern that turned out to be true. We pulled back down 2 times the target, which was 2%. We pulled back 4%. We have this here, trend line on the right side as a potential target, our resistance above 364, support to downside 357 and 351. Those are intraday targets. But we do have MACD here, uh, divergence, right? We do have a bounce momentum. So the question is how far can shorts pull it before the bulls are gonna say, no, 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 we buy now, and and it's gonna be the lower high bounce, meaning we need to establish the lower low first. This applies to everything, crypto. This is real technical analysis, right? It's not just like looking at one little spot on an indicator. We're talking about all the tools combined is of technical analysis, right? We might short down to 350, 355 tomorrow morning, and we might see a bounce up over in the next couple business days, trading days to 350, 355, 360, excuse me, to 365 to 360. Okay, based I'll just draw in blue. So you might see one down and then up, right? Because we had the debt ceiling for fundamentals of stock market. We had the debt ceiling um, mostly resolved today. Congress, the House and the Senate, they finally agreed on it. President Biden had that last minute addendum bill that he signed. So we just play our support and resistance levels and use some of these tools to help us with momentum. And now we're prepared for tomorrow morning. We have some kind of general plan. I mean, if you're a day trader, you have to really, really look inside. It gets a little trickier on 15-minute, 1 hour charts. Like if someone's at H5, excuse me, if someone's a 5 minute, okay. And we, again, you manually draw. I know I have a lot of lines up here, but you manually draw your analysis. You can see, okay, it's at some relative support level. So, if somebody's trying to do this, very, very tight stop loss, it's 2-to-1 trade. And then you just put the risk on and then you walk away. Or not walk away, but you don't have to panic about it anymore. That's trading. Position size, risk management. You see a setup, okay, put on some risk. And the only thing that can destroy is fundamentals and shorts. But if you do the same thing, if somebody's a long and you just randomly buying all over the place, you see how many times you're going to get stopped out in stocks and crypto, right? If you buy here, you're stopped out. You buy here for no reason because of FOMO trade. This one, let me turn everything off so I could show you guys. Right? If you buy here, you see you get stopped out. You buy here, stopped out. Buy here, almost stopped out. But you probably wouldn't sell, right? You buy here again, stopped out. You buy here, stopped out. So you just don't want to keep destroying your account like that as a trader. You want to buy, if you're long, support is your best friend in the world. You love support. For me, the way I retrain my brain is not about, you know, uh, what are these indicators? What's the indicator? What's the indicator? It's support is my best friend. Why? Because if you're long, support is the safer spot to buy. Just matter of fact. If you buy a resistance as a long, the chances are so high that you're going to get stopped out on resistance pullbacks. Right? That's why you have to put in some effort and put in some work as a technical analyst on your charts, on whatever time frame you're doing. Hopefully you start on a longer time frame. You should do that because if you just look at this 5 minute, you're looking at 3 days of price action and you don't see anything else on the left side. You have no frame of reference. That's why you always see me starting from a longer term and you zoom in. That's how you prepare yourself. If you look at a 1 minute, on only one day, there's basically you have no idea what's going on for crypto or stocks, right? You have to start on a longer term time frame and understand where you are in the structure. That's how you might win, and you have an advantage over other people who don't do that uh, analysis and work. Okay, so that was like kind of off topic education strategy. But again, QQQ. Now that we did our technical analysis, we have some sense of bearish case and bullish case. We don't need to be afraid anymore. Right? The news is going to keep pumping that bearish red headline into my face tomorrow on CNBC and Bloomberg and online, but I already am prepared for this. If we pull back, where's the support zone? Boom, right here in the circle. That's the test. If we pull back, that's the first test. If we lose that, second test. If we lose that, then there's some other support down here and the trend. But at some point, we usually bounce though, because shorts they don't like to, day trader shorts, they don't like to short forever, right? Because they'll lose money. They short forever and they don't close the position here, like longs jump in and shorts close, right? They will get unlimited losses, and nobody wants that. But here, lower low, lower high, boom, right here. Again, X marks the spot for tomorrow morning, and then we might get that bounce follow through next week. But again, from my experience and knowledge in the stock and crypto market, if something bad happens in the world, news or fundamental, the government says something, the president of USA, SEC, the Federal Reserve, any other foreign government, right? Something bad happens, bearish news fundamental, you bet we're pulling down. The chances are greater than 50% in that case that we'll pull down. The inverse is also true. If you get good news on stocks and crypto and the setup is there on charts and the technicals are there and people are getting excited, they're getting more happy in their mind emotionally as traders, then yeah, then you establish some low and then we bounce. We bounce. That's how the market works for intraday trading. Okay, so I spent a lot of time on that, but it's very important. That's probably like, one of the most fundamental lessons of technical analysis of support, resistance, trend, targets, risk management, position sizing, strategy, right? This is like, if it, this is a very important stream I'm doing here. I don't know if people realize. So it's just a matter of practice, right? If you're like, okay, I cannot do what No Former Charts is doing right now, you just have to keep practicing on practice on a day chart. I did this on hundreds of charts every single day for years straight. That's why I could do it fast. So if you're brand new to this and you're like, I have no idea what's going on, then just keep studying and practicing. And then in trading view, you have paper trading right here on stocks and Bitcoin. You could infinite paper trading to your heart's desire, infinite strategy testing, infinite Pine editor to make your own script. The stock screener is paid, but I believe the paper trading and strategy testing, if you have a free account or low paid account, like a $5 a month, the pro tier or the free tier, I believe even you can just do it. And it's a matter of like how hard do you want to work and practice and get good. I remember I used to paper trade every single day. I used to strategy test every day. I did all that stuff. I put in all that work already. So and now I'm here, right? So it's just natural. You know what I mean? If you study and you work, you'll probably get better. If you study the right thing and you're working hard. So that's just a motivational section of this stream. We keep going here. Let's take a look at gold. Looking at gold here. One thing I will point out too is when this is because trading and investing is so psychological. It's all emotions, right? If that's what the market is. Price trading, this is emotion at work. Like people's mental state. If something happens, something good, either technical or fundamental news, oh, that means the market's going to go up. That means the price is going to go up. That means I can make money. And then people buy here as a trader and it goes up and they make money. Some people sell here, right? Because resistance. Some people let it go. And then some people sell here. Sell half here, sell the rest here, right? Well, thank you, Razak. I'm trying to make my charts analyst like analysis and education at the same time, right? So one of these days I'll do a real education stream where I just answer every single question, but I need to do charts too because we can't just talk about education and philosophy and stuff like that because in my experience, you know, the charts, once you have enough knowledge and skill, then you have to take action. You have to make a plan and take action, execute it, the plan. But one day I'll do an education stream some other time. Um, but I'm just trying to cater to a lot of people, right? If you're a beginner, if you're a intermediate, advanced, or even at the professional level, we can all still learn. Never stop learning and working and practicing. What I was about to say, though, the last thing I'll say is that the market is psychology. It's emotions. If people are afraid and they're negative and they lost money and they're sad and mad, they will not buy. Bulls will not buy. That's what this is right now. Shorts will take advantage and say, "Ha, we're gonna short it down." Professional, smart money, they're gonna say, "Boom, we know what to do here. Boom, make money, short it." Right? But on crypto and stocks, if there's no hype and there's no excitement, people are gonna walk away from the market. But I advise you and urge you, if you want to be a professional, serious technical analyst, try not to walk away from the market. Like, don't look away from the charts. Meaning, if you see enough red, like, let me use Bitcoin. Just pick anything, Bittrex, right? When you see a lot of red in the market, I know a lot of people psychologically and mentally walked away and closed their laptop or the computer and just stopped looking, right? At least before you walk away is do the technical analysis and understand what levels, right? Because you understand here, if we repeat this, if this ends up happening again and we crash back down, Don't just walk away from the market and close your charts and close your laptop and forget about it, because that's not what professionals do. Professionals stay locked in on their charts, experienced people, and they know if it's red, someday it's going to bottom out. Like in this structure, it's going to bottom out support, and that's where the smart money's buying. Who do you think this is right here? Day traders, experienced traders, swing traders, smart money right here, right? That's why I keep talking about support and resistance, and you have to have some levels in the sand of, even if you do take a break from charts or you walk away or you don't want to do it anymore, is you have some idea of what's to come in the market. So that's why I keep saying the resistance on Bitcoin appears 50,000. We have intermediate support at 40,000. If we lose that, 37,000. We lose that, 30,000, then 30,000, 33, and then 30,000. So you have some idea of, if we crash down, where are we going? You're not surprised at all. This is the zone, at least here, right? And then if it crashes down, you might see some bounce rebound up. Okay. So that's the thing with trading and investing, is once you get good at the charts, or good enough at the charts, like intermediate level at least, excuse me, then you can do your analysis. So how does that apply to like stocks too? It's the same thing. When SPY, S&P 500, the market's going up, this is bullish sentiment in the market. Okay, excuse me. This is bullish sentiment in the market right here. And you have to realize, just in case, you never want to get too bullish or too bearish. You don't want to get too greedy or too afraid. You have to be on your toes. It's a stock market. Yeah, millions and billions of dollars fighting each other. So this might be the start of the downtrend. Why? For stocks, because tapering is going to begin. The Federal Reserve announced a tapering program that's going to start in November. It's going to last for a year. What does that mean? The fiscal stimulus, they're going to start reducing that to see if the stock market economy can stand on its two legs by itself. Global U.S. economy, which will affect global economy. So the hedge funds are selling, they're shorting, institutions selling, people putting on protective hedging options. That's just what all this is. Day traders catching the wave, swing traders maybe holding on to their cash, waiting for this, right? I'm not saying we're going to crash like that, because you would need like world war to happen for that, or like COVID #2, right? I hope that never happens. But you can see the proof is, if you have an extremely bad problem that's global, you will see the market crash down like that. But tapering, the Federal Reserve said they're going to try to control the tapering, basically hinting they're going to let it down slowly. Okay, so we might not get such an aggressive pullback down, but if you just look at here, this is pre-pandemic, pandemic low. If this is the pandemic relative high, we have to establish some pandemic low here on stocks. And that would affect crypto as well. Negative 3%, 6, 9, 12% might be in the cards on the downside. Okay, so we don't want to get overly, we want to be able to keep up with the changes in the market. We need to keep up with the changes. Yes, very possible. You're talking about SPY. Someone was saying there's a forecast, because we just hit 430. I can't erase this because it's my idea, but 430. Where's 415? It might stop at 421 first, because right here. Um, yeah, 415 is definitely possible. Why? Because we're already downtrending, and I'll do it on SPX though. I drew it before. Is the first trend line in the sand was lost. You see here, right? So we're at 430 SPY, basically 4,300 SPX. But if you zoom out and draw the second trend line here, you can make the case that something else might happen. That's what their target is. 415, 410, 400. See right here? That's, if someone's just pure technical analysis, it's actually forecastable. And then the horizontal, let me turn the Fibonacci off. The horizontal support and resistance, this is how somebody could get that number. 4257, 4157, 405. Those are the three numbers. It's basically 430, 415, and 400 for technical analysis support levels to the downside. Our resistance above is 435, 445, and 450, like that. And then you have the two trend lines uh, on the you can see it here. We just lost the first trend line in a daily downtrend. At some point, we're going to find our lower low on SPY, on SPX, and then we're going to bounce. Just like here, we found a lower low, bounce. We're going to seek it out tomorrow, maybe Monday, right? It just depends on how exaggerated the selling and shorting is going to be. And then it's going to find that relative bottom, maybe 420, 415, and then bounce up again, right? Markets usually do not crash straight down unless there's an extreme problem like COVID or World War, or like say like if the internet, if the if we lose internet globally, oh man, stocks are that would be a huge problem for stock market, right? Also, there's the global energy supply problem right now. I don't know if you guys heard this. I added it into my Discord weekly watch list. Is that there's a natural gas supply shortage that's been building over the past year, and countries are outbidding for it. So they're paying high prices for it right now. And so going into the winter, you might see higher energy bill prices, energy, gas prices, oil prices, natural gas prices, electricity prices, utility prices because of this global energy supply chain crunch. Also, what I'm just feeling in the market right now is we're getting supply chain problems. Like, have you noticed that at your local store, online, and your store? Like, there's stuff more out of stock than usual. It's because shipping problems. Boats are stuck at the port, right? Um, Chip shortages, supply chain back up, and like everything's backed up for like 2 to 4 weeks, right? So that's having a problem on the market. But yeah, CEI, I made money. I traded money. I traded CEI. I made money. So, that's your chart. I don't want to jump right into that because it's kind of weird jumping from S&P to it. We'll get to it though. And then we'll probably end. I'll probably go for 30 more minutes and I'll end because I know I didn't do a stream in the past couple of days. So let's look at gold. Let's look at gold here. And I will pause here to say I'm streaming live on TradingView, YouTube, and Twitch right now. It's kind of evening here in the USA. If you have to go, I understand. But I want to let you know if you want to go ahead and follow me on TradingView, YouTube, Twitch, or Discord, go ahead because I'm a full-time investor and trader. I do charts and trading every single day, basically. Might take one day off on the weekends, 1 or 2 days off. So now we're looking at gold. We can see here XAU USD daily chart. So you see here, we pull back on gold to our support levels that we talked about. We had our resistance in here, the yellow support, test it, fall back down, and then bounce up. Interesting that Bitcoin did the exact same thing on September 30, basically. So people are using Bitcoin as a hedge as well. Bitcoin as a hedge as well. If gold and Bitcoin do the same thing, psychologically, people are taking their money out of stocks and running into gold and running into crypto for safety reasons. Because if Bitcoin's digital gold, it makes sense to do that. So now what's possible? Okay, well, I have to draw this resistance trend line up here on gold. It's still holding, so it's still a problem. It went boom. It went boom here. And might pull back. So gold in a daily downtrend. And we'll get to Ethereum. Thank you for that request. We'll get to CEI as well. We have to take a look at silver as well. So okay, wait, we'll go back to gold. Somebody was trying to like day trade gold, I guess. So this is why. Yeah, unfortunately, if someone's trying to day trade, you got to get the kind of that bigger trend lines. That's what I'm saying. This is my process of you draw everything you possibly can on trend lines and support on longer term charts, and then you zoom in because this profit target was there for a long time, for a month. This resistance target right here, this trend line was there the whole time, and the support was here right here since August and April. So that's why longer term like funds and traders and chartists, TA people might have seen that. It's like, wait, and the intraday momentum is, wait, we're rallying, and then where are we going to go? Right here's the first target for pullback, for sell off. So we might pull back halfway down to 1738. Okay. We'll just do a quick look at silver. So silver in a downtrend. Okay, we did get that same psychological bounce in the pullback down. We hit oversold levels. That means on intraday it's oversold as well, and then we got the bounce. So one thing I will draw here is that we have our resistance trend line on the top here. Let's never forget about that support and resistance. And then we lost the channel here. You see that? That's bad. It was in a long-term consolidation channel to the right. And again, when you lose that's very significant support, it's tested and rejected down, that's a problem for silver. Okay, so I'm just going to call that now because this is daily downtrend. That's bad. But when you lose the support or reject down from it, that's also bad. But again, is it going to crash down to zero? No, it's not. It's going to find some relative low somewhere down here, maybe 20 or 21, and then probably bounce up for that sweet trade. Okay, we have two requests. Actually, I should do oil just so we have a oil and natural gas really fast. So we have some reference before we go into CEI. So U.S. oil, I call this potential on a stream like a week ago that this might be upside down head and shoulders, and it turned out to be true. I said if it plays out, we're going to go to the target, and it went exactly 10% to the target. So technical analysis, we have to be on our toes. Here's where a trend change. So we're going downtrend into an uptrend, right? An inflection point right here at an oversold level. So that's where you use all the tools. All the tools, meaning first you get your support and resistance, and you say, wait a second, there's support zone somewhere here, and then there's resistance here and here, just to get those four levels. Then you start tracking the price. You could put a trend line. This is how I do it fast, right? And you say, oh, it's in this. Okay, so we made a pivot point and we bounced up, and then the target's here. But if we continue up, there might be this upside down here on shoulders, which I was talking about. Neckline, you measure that, 10%. You had so a very, very aggressive trader would have gone in oil way down here, the moderate stop loss, and try to get, 6% or 10%, excuse me, 6% or 10%. I'll just do 5% for now. But if somebody was conservative and they wanted to play this pattern, somebody could still make money on this trade, right? 4% to downside, just below these candles on the left side, and then take profit on the right side. So that's why people are selling oil right now. Also, the energy crisis, the sell the news event of the crisis, they're playing that, and boom, they're out. So now we establish a new resistance at 52, 53 for oil. And how do you get that? Look way left. You have to go 1.5 years to the left, and you'll see all the resistance zones on the left side here. 58, you see this? All this right here. So that's the levels you're playing off of. Support is here. Okay, so natural gas, made money on natural gas trading. And again, if somebody's really paying attention to natural gas, there's a big support level here. That's why I like to start on longer term charts, because if you didn't draw anything, the first thing I see on this chart is, wait a second, there's that. And then second thing is there's that. And then once you break out, that's the signal potentially for a potential trade. And that was a very, very nice trade because the energy crisis. It's 100%. And the stop loss, if somebody's really, really honest, 25% or conservative 10%. That's like the greatest trade on natural gas ever in the past like 5 years, because we got oversold. So don't FOMO on this right now, because it's already up 100% from the low. And if this is where you bring in other tools, it's already a little bit overbought and starting to lose momentum a little bit, right? But that's just an example. It is up cross, so it's kind of like a crypto. It kind of needs to pull back a lot for buyers to say, okay, that's discount, let me get back in the market. But if you just buy it like today, that's FOMO, right? In terms of you're buying at a resistance zone, and there's a high chance it's going to pull back on you. But now that we know U.S. oil and natural gas had that bounce, we could check like a stock, like a Camber Energy, which turned into a meme stock. One of our members here, our followers, pointed this out to me, and generally, I gave the two scenarios generally, right? Because we drew this triangle. This is not, the most liquid stock, although it is for day trading now. We had a huge, huge breakout play, right? And the key though is if somebody found this at the support, that's the ultimate uh, no FOMO position right here around CEI. Just because it's at a low support level and it's so cheap and it's related to the energy crisis and what's going on, somebody might be able to put that in there. I can't even draw it because it's so big. But you understand that, right? The bottom support, that's what I'm saying. That's the lower risk area. The highest risk areas are resistance in the circle. Except in this particular case, sometimes you get breakout plays. But the psychology of this is what I was saying last time is if it breaks out, might need a retest, and then you're off if enough bulls take it. This might have had, let me check the news. I don't think there was any particular news. It might have happened like way back here in August. But the past couple days is just momentum. It's just day traders, meme stock traders, hype. Once you get the breakout and they continued up because it's such a cheap stock. But you saw that it was possible one, two times with two other fails, right? So these types of when somebody does a breakout, you definitely need a stop loss. In this case, the stop loss did not trigger, and then you're in perfect take profit. Yeah, there's a lot of hype. Even once I realized, okay, we're not actually pulling back on CEI, I traded. I made money on CEI. But this is not for beginners. You know what I'm saying? Um, a day trading a CEI like today was not for beginners because it pulled back significantly. People lost money yesterday and today if they're trying to FOMO in. That's why you never try to buy. Like if something goes up 500% or 100% and you see visually it's at a resistance, you kind of have to you kind of have to control yourself emotionally and just let go of the trade, right? Yeah. So basically, because we talked about this is if it pulls back, I was saying it's going to pull back here to like 89 cents or something like that. But if it breaks out, it's going to break out. And that's exactly what happened, right? So I always have to just be prepared for this scenario. CEI, right? If somebody was really, really in the industry, they knew about CEI. It's already up 329%. And then the oil, natural gas, the energy sector, the crisis, give it that jolt. And then you get meme stock traders, day traders hopping in just because it's moving. Boom, you get 100% move from the breakout. So that's tough. That's tough. Yeah, if you get stopped out, I mean, these like multi-day momentum traders, once you get volatility, I mean, it's all about risk management and position sizing. So here's an example of two spots, and we'll move on from here because it's so high, right? This is very unlikely you're going to keep going higher unless the company does something amazing with the fundamentals and news. Is you have two spots. You have a support entry, or you have a breakout entry. The breakout entry is always much more risky because you saw in the past, if you try to chase the breakout, it might crash on you and you lose a lot more money than you want to. In this particular case, though, you had a lot of minute day momentum, and it turned into a day trading stock. But we were watching this. So where are we right now is we're floating in the sky right now. So just really be careful of that. I would not be surprised if Camber Energy CEI, in like a day or two or next week, gets shorted down to oblivion down here to $1.50 or ultimately back. Like I will not be surprised if that happens in the next couple months. Because if there's nothing that really changed with this company with fundamentals and news and the energy sector, the shorts are going to destroy this someday. Okay, I'm exaggerating. I'm trying to exaggerate just to make sure no one's going to try to FOMO in at the way top. Somebody bought a 484 and is down, right? If somebody tries to swing trade, somebody's down negative 20 plus percent. Negative 20% is a terrible situation. So just be careful on CEI when something like that happens. Okay. We got our next request. Vortex, if you have a request, let me know. So finally, we're getting to Ethereum. We're going to go back to Ethereum, and someone wants me to do like an example risk to reward. So this is on Ethereum. Uh, I'm going to start on longer term day chart. Okay. And this is educational only. Okay. This is educational only. This is not financial advice. This is educational. Okay. So the first thing we need to go down the mental checklist for crypto is even before you jump into Ethereum, check total first. Total, the entire crypto market cap for clues. So on our day chart, we have our resistance up here and our support, immediate support 1.8 trillion, our resistance 2 trillion, right? So even on the total market cap, you can see here, bounce off that 50% retrace and testing the 382 level right now on all coins, the entire crypto market. There is a trend line on the right side here, just like gold. Do you see the relationship between gold and crypto now? It's almost the same. So the correlations are back of crypto and gold acting as a little bit of a hedge and protection asset in times of uncertainty. Makes people feel safe. And it plays out the story. So the question remains: is the crypto market, we're going to break out about? Are we going to break out above this resistance or not? So now that we have that in our minds, we'll just take a quick look at Bitcoin doing the same kind of thing. I'll just draw this. I have to use a different chart. Doing the same kind of issue. It's because Bitcoin is the big king of crypto, right? You support and resistance in the trend line. So now that we look at Ethereum, is doing the same thing. You have the support level, resistance here, and then you have the trend line, resistance trend line and support trend line. But I'll draw this resistance trend line right here. That is right at resistance right now. $3,000 psychological and technical resistance. So it depends on what type of trader somebody is. Is somebody a long-term investor, hodler, swing trader, day trader, scalper? It's all different. But the fact that we're at a daily resistance and that we're already downtrending tilts the scales a little bit that we might see more downside in the future for Ethereum. It's possible, right? Because this is essentially a larger term consolidation triangle, a bear flag, if you will, pennant on the daily. So we have to prepare ourselves for two targets. If we measure this, we did this before, but it's basically 8 to 16% longer term, like 7 to 14%, right? So right here, a plus 7% would bring us to 3145. A plus 14% will bring us to 3340. The opposite, bearish case, if we go down 7%, it's taking us down to 2704, negative 14 down 2492. Okay, and I'm going to go ahead and put this in the blue and keep this here for longer term targets because that's technical analysis. And we do have a bunch of intermediate, intraday support and resistances in there, but this is kind of that longer term picture for the next maybe a month or two. Well, crypto is correlated, it's connected, meaning that Bitcoin is the king of crypto, and all the altcoins, for the most part, more than 50% just follow it. It's controlled by bots and algorithms by the market makers. So longing here is, like I was saying at the beginning of the stream, is there's significantly more higher risk. If somebody's, let's say, an investor or a swing trader, right? Because you're longing at a daily resistance zone right now. Right there at X marks the spot. That is resistance, trendline resistance, horizontal resistance, and triangle pennant pattern resistance. There's two resistances right there. Yes, you have MACD momentum, but it's just still resistance. So until it gets broken and tested, it's a resistance. If we look at intraday price, okay, if we just look at like 4-hour H4, H1 price, it is consolidating to the side. It is turning into a little bit of a Bart pattern, possible dirty upside down head and shoulders, but it's still not at the support level. It was at the support level on September 29th. You know what I mean, right? It was here in the circle down here. That's your better risk to reward entry. It's just that when it turns red, most people don't want to buy that, right? Because right here, this is what we said before: is if somebody's going to long here, just understand that it might fail and pull back down to 2921 or 2880, right? Because the bots and the experienced swing traders, they always look for best discount, best value, and they're buying here. This is an actual pattern here, double bottom. So okay, that was an easy one. If somebody just trusts in charts, and we went 3%, okay, so it's done. And it's consolidating now on the short term, right at a resistance zone. So I will not be surprised if we, like I said before, if we pull back. So a potential entry for educational purposes is people like to play the support level down here in the circle. So if it pulls back anywhere to upper 2800s, that could be a first very, very, I'm not going to say safe because nothing in crypto is safe, but it's better risk to reward. If somebody just buys here right now in this second, you have a 6% to downside. So you have to open up your target to 12% or 10 to 20, and you're gonna have to hold it for like 6 months if you're gonna do that. That turns into investing if you have to do it that big of a risk to reward ratio. But a lot of people here are day traders, so they're not gonna risk that much. Maybe a couple percent on a medium sized position, and then you try to get your 2-to-1 ratio. So if somebody buys here, there's significantly more risk. You could still buy it, right? It's not illegal. But it's higher risk. If you buy it down here, maybe put 2 or 3 orders, right? Some people cascade their orders. So they buy maybe today, and maybe they'll put one order here and they'll put one order down here. It's just your style, your position sizing, if you're willing to track those trades. But for me, I always try to find the best relative level of support possible for longing, and then you put your risk on in a reasonable position size like this, and then you let go. Set your alerts and you let go. Right. So I hope that answered your question. Somebody could long here. It's just you're taking on double the risk to the downside. So maybe if someone's going to do that, maybe do a smaller position, and then if it breaks out, then great. If it breaks down, you have to take your stop loss, right? Be disciplined, take your stop loss, and then try to get the support down here. If that fails, then you got to really, really wait for the definite bottom of the move. Because see, it's not really at the bottom here either on H1 or H4. Not really. It was over here, September 22, 27, 29, right? That's why bots and experienced people just buy it because it's at that support level. All right, so that's why for day trading crypto, it's harder because sometimes if you miss it, this is why I'm no FOMO charts, because I started with crypto. If you miss it, you want to chase it, right? Because you see a green, you're like, dang, I missed it. I missed it. Why didn't I buy? Or why didn't I see that on the chart? Why didn't I put an order or alert? I missed it. I want to make money. I want to make money. But then it's like, if you force the trade and it's not there, that's why people get stopped out. Or if they buy it too high at a relatively high spot near resistance, it's more likely to pull back. You get stopped out. So you don't have to, it's never good to go all in anyways. So, having multiple zones of orders is very smart, actually. You just have to manage it well. So I'd encourage you. Okay, so that's not financial advice, okay? I'm trying to teach people here analysis education of what might happen. But if Ethereum breaks out, okay, it might turn into a breakout setup. Definitely possible. Definitely possible. But if it rejects down, we're looking down at 2855 support. Hope that helped people. Looks like we're not getting that many more requests. Yes, anytime. So I'm looking at YouTube comments. Somebody say, if you FOMO, you lose money instead. Exactly true. If you chase money, if you get too greedy, if you FOMO, if you miss something, you keep trying to chase it and you force it, the market, the the market will punish people for doing that by losing money. It's going to flip on you, right? So that's why some people, they don't like my style because they're like they just want to day trade, 50 times a day, and it's like, okay, it's dangerous. You know what I mean? You can't keep losing money forever. Go bankrupt in your account. So you have to have some risk management, position sizing, emotional control. The way I learned to control my emotions over many years of practice and studying is doing technical analysis, getting your longer term targets, support, resistance, trend, risk management, position sizing, and not looking at charts every single minute of the day. Just staring at this Ethereum price here all day long will not really help that much. You have to put in some sweat equity. You got to put in some work on the charts, even if it's just a little bit, to help you understand what's happening here. And then if you want to study and practice as much as you can, that's how you get better than other people at this at charts. So I'm going to open up maybe 5 minutes of requests and questions. If not, I'm going to go ahead and close it up here. So quick recap, we looked at crypto for like an hour. We did educational questions for like 30 minutes. Then we looked at stock indexes for about 30 minutes. Then I did some more educational examples for this final 30 minutes. So again, none of this is financial advice. It's educational only for stocks and crypto. And if somebody came in towards the latter end of this stream, how I'll close it is it's the end of September right now, the beginning of October. What does that mean for stocks and crypto? Is the candles of the weekly and the monthly will close. It already closed if you're in Asia, right? The monthly candle closed on Ethereum. That's what it is, a printed final. Oh, excuse me. Uh, for stocks at least. Crypto, it needs a couple more, like another day or two. But the stock market, right, this is about to close. The monthly candle is about to end. So it matters. It matters, right? This is not the greatest bullish monthly candle close for Ethereum. If we close like this on a weekly, that's not super bullish hype because you could pull back down halfway down to 2400 and still be in an uptrend, right? Is this cup and handle, or is it going to turn to higher low, or is it going to come back down to support? All those questions are in a longer term investor's head. Plus, with S&P 500 and what happened with the Federal Reserve and their tapering program, that's official now. Just prepare yourself in the back of your mind that we might see downside on stocks, and that might creep over into Bitcoin as well. Okay, so I'll just end it like that. Focus on, just get your bearings on long-term charts, and if you're going to day trade, just try your best to not FOMO and try to do support levels. Risk manage, um, position sizing. Don't chase. Let go. If you miss a trade, just let go and get set up for the next one. That's day trading. Swing trading and investing is get prepared and get your targets ready ahead of time. Because I guarantee you that hedge funds in September and August, they announced it a month or two before they started shorting that they said they are going to short tech stocks. They announced it on Bloomberg Live a month ago. So watch support, resistance, and trend. Try to get ahead of other people in the world on your charts using technical analysis. So I hope you guys learned a lot today. I did 2 hours. I went 1 hour over, answered a lot of questions because I know I didn't stream for a little while. Again, thank you so much for watching and following. This is educational only. I am streaming live on TradingView, YouTube, and Twitch. If you want to give me a follow there, if you like this, if you learned something, I also have a Discord group that I post a free general watch list of what I'm watching out for in the coming week. So I usually do it on the weekends, and I do live streams on here on TradingView. So thanks so much, everybody. I hope you have a good weekend. And if we put in the work on charts, we don't have to be so emotionally affected with whatever happens in the world on the price. So thanks so much. I hope you have a good